All right, $209 in 4 minutes. I closed out my trade. I'm done for the day. And so the thing that most people and beginner traders are not going to get is that you can pay $100 one time to be in the same room as me watching my trades every single day of January to get these same skills and be able to make 100 to 200 every day. And you also get all the replays, and you're going to get every single live I do in in January. Or you can try to figure it out on your own and then be averaging $100 a day by 2027. So this is just $100 once, and I'm offering it and I'm talking about it because the doors close December 31st. So I want to make sure people have time to get into the doors. The link is in the description. It's on my YouTube channel homepage, and it's also should be pinned in the comments down below. I want to show you how some people are going to be thinking, like hoping they don't blow up their accounts, um, like basically for the next year. But you don't have to live like that. You don't have to trade like that. So I'm going to go over the trade I took today that made me $209. And then we'll talk about exactly the one question you have to ask yourself before you get into any trade, and it saved me tens of thousands of dollars. Now, I've made tens of thousands, I've lost thousands, still profitable. So, if you want to get into that January live room, make sure to go ahead and get in because the price is going to triple pretty soon. Now, let's see what we were looking at today. This is the 15-minute on the left side. I trade QQQ, and we have the 4 hour on the right side. Now, the beautiful thing about today's trade is simply that we had a nice push down candle, and there was only one reason I took it, and it was because it tapped into our zone. And the loss I took yesterday catapulted me into remembering and having things top of mind for today. So when you take a loss, doesn't matter how big the loss is, you need to wake up the next day with that lesson in your hand, and everything else doesn't matter. Because guess what? Can't get that money back, can't go back in time, doesn't matter. Like in the next 3 trades, you'll have that money back if you focus your intent on what you do now. And even if I was still in this trade, I would, let's say the next candle, we don't know. I got out because I was cool with my profit. My daily cap is like 200. So once I hit 200, I'm like, okay, I don't care. Rest of the day, blah, 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 whatever. All right? That's a rule for me. But you could still be in this. And let's see if the next candle pushes down to 618. That would have been $1,000 day easily on my end, right? But, but, the thing is, when you take a loss, you take that knowledge and then you stick it in your head and you say, I'm never doing that again. That tuition is called market tuition. That market tuition I just paid stings, and I'm never going to do that again. And I'm going to move forward with the rules I know that work. There you go. Now, this is the beauty of having trades or having rules that you believe in. Because when you believe in them, not only do they work, right? It's that they work on rinse and repeat. So the rules that I have that make me 100 to 200 every single day still exist even when I take a loss because I forget some things that need to be top of mind and I let it slip or have a sloppy entry and it does me dirty. That does not erase the rules that I have that work. So I pop back up today, make my normal income after just taking that loss on my account. Why? Because the rules that I have worked. So I really want to see what happens to this candle here. Let's see how much this drop was. It was like I didn't really enter there. I pretty much entered like, I mean, it was pretty low. I should go check the time on my trade and see what time I entered. But let's just say like this was the drop. I mean, $2. You don't need a lot of price movement to make money. You need a really good setup for that price movement. So the one question you need to ask yourself is, how much money am I willing to lose on this trade? If this all of the knowledge I have means it should work out, but if it doesn't, for some reason, and I'm missing something, or I'm skipping some steps, or I'm like not following my rules completely, what am I willing to risk? And if I risk it, am I okay losing it? What am I okay losing on this trade? That's the one question that saved me tens of thousands and made me a lot of money. A lot. Because if you ask yourself that question, that is now your risk management. So risk management is not one number. Okay? The reason why risk management is not one specific, and we're gonna get into a topic right now. I wasn't expecting to make this right now, but I think it's important to just go over what risk management actually is. I think it's killing a lot of traders, and I think that it's something that needs to be top of mind in order to even succeed in trading. So, um, I personally believe that a lot of traders are failing, beginner traders, not only because they take yesterday's loss and they turn it into a whole different thing, they keep it today. You don't have to do that, right? But they're also losing because they enter too early. And if you're a person that's been trading over a year and that still happens to you, it's not because you suck. It's not because you're bad. It's not because other people are better. It's simply because it's a thought that's not at the top of your mind. So, how do you fix it? That's what we're going to talk about in this video. Because if your entry is sloppy, let's say like you enter 5 cents above where you want it to, that could turn into a huge loss. That's why your risk management is so important. But it's not as important as most people make it seem, right? It's actually way less complex, is what I'm trying to say. So, your precision with your trades matter. And everything I'm saying is going to turn into a big circle. Just listen while we watch this 15-minute candle play out and see if it actually drops here. It may or may not. Um, I mean, Trump spoke yesterday, had a lot of other news yesterday. I think we have PMI today. So let's see. I could have still been in this and been up 1,000. Like right now, I would be up 1,000. But guess what? I don't care. You know why I don't care? Because that's not my rules. That's not my rules. My rules are not to stay in to trades that look good. My rule is follow my rules and then get out at my daily profit that makes me thousands of dollars a month. That's my rule. And so I don't care what's happening outside of my rules. Like yesterday, this is the candle I took outside of my rules. And what happened? A loss. This is in my rules. Tap to market. Pre-market was very bullish. So I know it's about to reverse strong. I enter in. I take my $2 drop. Boom. $200, 5 minutes out the market. If I do that 2 or 3 more times, I not only do I gain my capital back from that loss, but it's probably going to be faster than that because my rules just work. But your precision is so important. Everything I'm saying is going to make a big loop. Okay, this video is not going to be that long, maybe 20 minutes. So make sure to watch to the end. But the point here is that candlestick literacy is not knowledge, it is a discipline. So just because you know what candles look like and you know what they mean, you know what the colors mean, you know what the wicks mean, you know what the bodies mean, right? So you know here, oh, this candle rejected this 620 level. Just because you know that doesn't mean anything. Oh, this is a big bullish candle. This is a big bearish candle. Oh, like this is a consolidation. This is a reversal. Just because you know these things, knowledge doesn't mean anything. It's the discipline of applying it. It's a discipline of application is what makes you money. And so the first thing I want to talk about is that precision is one of the only things you can fully control. And your precision is two things: how much you put on a trade and where you enter that trade. So, how much you're risking and how much you size. In this video, we're going to talk about how much you risk. That's what we're talking about, risk management, because it's a very big part of precision, and you get paid in direct proportion to your patience, and you get paid in direct proportion to your precision. So, for some other trader in the world, they might still be in this trade because it aligns with their rules. But for me, this does not align with my rules. It invalidated all my rules to stay in, so I got out. I was actually at 300 profit. And then I was like, oh. But then I got it at 209. Because what? That's what aligned with my rules. Sometimes my rules say, sometimes the trade is going negative or squeezing, and I ended with way more than I thought I would because that's what my rules did that day. Sometimes, like today, I got to 300 profit and only left with 200 because that's what my rules said. So every day is different, but the point is your rules and your precision are going to make your trading journey. So for me, staying in this was not my portion. It's not my portion, okay? But when it comes to risk management, the only thing you need to know, I guess for beginners, is that you cannot lose what you don't risk. Your loss is not random. The market is random. But if you're risking something in the market, now your loss becomes random. Because when you enter a trade, you know how much exactly you can lose. Whatever your contract price is literally what you can lose. So your contract price is $120. If you lose 100% of that contract, like you lose all of it, your account is down $120. That's literally direct proportion. Like you can only lose what you risk. But what happens with risk management is we enter too heavy, over leverage, we start skipping steps, not recognizing our candlestick literacy, and then we start being greedy, amongst other things. And then it never hits your exact price level, and now you're in a trade going up when you're in a put. Okay? So something like this, look at this, beautiful, 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 beautiful. Could have stayed. But again, it's not part of my thing. Like, what if it comes here and it just shoots back up? It's not my problem. Like, one thing I've noticed is that the way that you trade has to be so different than the rest of life, right? In the rest of life, some other parts of life, you just treat it differently. Like, you would just assume that certain things will happen. But in trading, when you start assuming, you take that life advice and you apply it to trading, it's going to hurt you because that's not how it works. Like, let's say my entry level would be under the previous low. It's been 9 minutes and this candle has not even reached the lowest low. So even if you wanted to enter on this and say, oh, I'm going to take puts, there was no entry for you. But in anywhere else in life, you would say, oh, well, this is a huge candle. This one's going to push too. Let me enter. But that's not how it works in this game, in this industry. So if it doesn't hit your price level, you don't take the trade. Like, it's like, if it doesn't hit it exactly to the cent, you don't take it. Like, I want you to comment down below or in the chat, be honest. How many times have you entered something too early? Sometimes it works out, sometimes it doesn't. But I had to get rid of that behavior because I can't afford for it to keep going wrong. That's like that doesn't make me consistent, right? But something that looks like it's going to work out may or may not. You don't know. And if you're using one candle to confirm your direction, now you're skipping steps because that's not how candlesticks work. Candlesticks work in a group. They create a story that tell you a direction. One candle does not tell you a direction. So my story today was this zone, this rejection, also the volatility on top of that is what created my story. All these candles and the consolidation in pre-market. But if I enter this candle, this current candle based off this one, that doesn't really have a story. Because the story now is I'm entering because of one candle and making that my direction. The second thing I wanted to talk about is that candles tell the truth and your feelings tell a lie. This is why I entered on this candle yesterday. That's why here. Because the candlestick said, this is a one candle push down. I'm going to reject. And my feelings said, it's starting to push. Get in for puts. When I know that's not how it works. Because I was just skipping steps. It's not how it works. Still, this candle, it might end in a doji or an indecision, right? Might. And then it might push down $20 more. Oh well. Like, I'm done for the day. Because my rules have been set, right? And so, the other thing is that lower time frames. This is why I keep two sides. 15-minute on this side, 4 hour, 1 hour, 1 day. I've been looking at the 1 week as well lately, which is here, right? Move over. The reason why I've been looking at this is because, or why I look at both sides, is because the lower time frame tells all the noise. It's like the toddler that just wants attention. It's currently constantly moving, constantly dancing on top of tables, constantly making a scene. And then you look on the higher time frame. This is the mature adult. You always want to make your decisions as a mature adult in life. But that doesn't get rid of the inner child of you because you were once a kid and you still have a childlike imagination, childlike interests, etc. Right? So we have both parts, but if we constantly operate off that childishness, we're going to be hurt as an adult. So it's the same thing here. Like if you always take trades off that smaller time frame, then you're going to be hurt in the long term on a higher time frame. So this looks like it's about to push down. Perfect. Awesome. Whoever wants to get this trade, go ahead. I'm already out, right? And so that's just based on my rules. That's just me. The next thing I want to talk about is sloppiness. Okay? Sloppiness is so critical because if you draw a sloppy sloppy level, or sloppy at the price action, now your entry is sloppy. So when you slap lines on your chart, but they're not according to your ATR, which is down here, right? Your average true range, right? When you don't make your key levels according to your average true range, which is how much price moves in that time frame, right? So on the 15-minute, my ATR is basically $1. On the 1 week, it's $21, right? So if I don't make my key levels or my entries and exit lines according to that, now I'm being sloppy. So the thing is, the market is unpredictable, it can do whatever it wants to do. It's up to you to have a set amount of rules, and you're gonna often leave money on the table. Often you're gonna make less than you thought. Often you're gonna hit your daily goal and get out. Like you're gonna do like there's so many different ways that the trade's gonna play out. But it's up to you to come with a certain set of rules, your rules and your mindset. How much am I willing to lose? That's like your toolkit. And you take all that to an unpredictable market and you either leave in a small loss, you leave in a your regular gain, or you leave in a better gain. And then that's it. Like that's just it. The other reason I didn't stay in this is because when I looked at my HTFs, it really signals that we kind of do want to go up within the next week. So I wasn't comfy taking something that has a sentiment, overall sentiment of calls. Um, but see how we just reversed here? The same, I mean, we literally did this November 12th, okay? And we did it again December 4th. Like it, when you watch one chart, one ticker, you'll see all the things it does over and over and over and over. And it makes your losses less. It doesn't completely remove loss, and it doesn't completely remove the loss of the from the times that you have certain toolkits and you don't use them, um, or you don't follow your rules, right? But it does actually help you in the long run. And the other reason is why, like, I'm a scalper. That's my thing. Like, I'm a sniper scalper. That's what I do. In this particular way, I would have probably been only in profit $100 right now. Why? Because of time decay. Because it's like playing around. Like this candle, I took that volatility, that $2 push, and that was all I needed. I would have been in this trade now 30 minutes, and it's not even going my direction. It might push down $2 more like that, and then I benefit from that. But that's not a consistent way to trade for me because those aren't my rules. Um, so I don't trade off vibes. I just don't trade off vibes. Vibes are a very terrible way to be trading. Um, and again, like it's an unpredictable market, and so it's up to you to come with your predictability. That's the only um, that's the only certainty you have in this is the rules that you come with. So it's important that you come with those rules. If you're watching, make sure to smash the like button. I'd really appreciate it. It helps get this video out to other people. But yeah, the other last thing I'm going to say, or it's not the last thing, I have something else after, but the fourth thing I want to talk about is predetermination. 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 Like this should be stuck to the back of your head. Predetermination. If you do not pick an exact price, like this is, I'm giving you the toolkit for what to do for your entries or for your, when you come to the market every day. Pick an exact price, predetermine exactly where you want to enter, predetermine exactly what you need to see to enter, predetermine your exact confirmation, predetermine how much you're willing to risk, predetermine where your risk is going to end, your stop loss. And it's because if you don't predetermine your risk every single day, you're going to be out of luck because it's so rare that your contract size is the same, your premium price is the same, that the move you're taking is exactly the same price action. Like things change every single day. So you could be benefiting on a 10-cent move, a 50-cent move, a $2 move. Those all don't have the same risk management. So if you just come to the market with, hey, this is my risk management that I always have, and I'm gonna just use it, 10% cut every trade. Every time I trade down 10%, I'm cutting it. Like, that's not a consistent way to trade. That's actually a very terrible mindset to have. So for you and for me, right? Having an exact price is so important. An exact price level, an exact set of rules that you've repeated on autopilot, an exact number like in your head. Okay, I know I'm not risking more than this because I'm going to be entering this type of trade. If I know that the move I'm taking is a $2 move, I might have to risk a little bit less than what I normally do because it might take a little second for that to play out. And I don't want time decay to beat me up. But if it's a 10-cent move, my risk management is actually has more leverage. And that's why a lot of people just simply scalp or they simply do swings. Like it depends on the type of person you are and the type of risk management you want to have. All those things matter. And also your ATR, your average true range, it changes. Like in 2009, it was like 30 cents a day. Now it's like dollar 50, $2 a day. So as time changes, everything's gonna change. I also want to go look at the 1 hour, see what's going on. Like, let's see what's going on in the 1 hour. Um, like you could have stayed in this trade because you thought it was gonna keep going down, and it might. The thing is, it's always it might. It's always it could. It's always it. Sometimes it should, based on what's happening. It should, but you have to stop being naive, and you have to prepare yourself for if it doesn't go right. If you are, you have to take every time you take a trade, you need to build in some consideration, account for the things you might be missing. Like I think about Sephora, they make multi-million dollars a year. How? Because they account for every return in products they now have to throw away. Sephora is a makeup and cosmetic store. So they account for all the products they have to throw away when people return them because they can't resell them. They're already used. They have to account for all the stolen products from people that steal from their stores every week. They have to account for all the disputes of people buying online and stealing products digitally. They have to account for products being lost in shipment from overseas. They have to account for them doing a deal with the company and it falling through on a partnership, but they still make multi-million dollars a year. These are huge companies, huge corporations that operate this way. Your trading is no different. When you make a trade, you need to also build in that consideration. Well, what if it turns on me? What if I'm missing something? What if I'm just excited to jump in and I have a little itchy finger? I need to go buy a hoodie or buy a shirt or go to dinner or spend some money somewhere, but instead I'm trying to come to the market to get that same dopamine hit. Like you have to account for these things, and your risk management is going to help you to do that. Asking that one question: what am I willing to lose on this trade? Because like it might happen. But guess what? If you think about it in advance and you predetermine that amount and you lose that 100% of it, let's just say you lose all of it. Now you still have your control. Your control is in your precision, and your control is in how much you have left after you lose or win. Because that's what gives you another ticket tomorrow. Here you go. Now you can trade again. Now you can get back in. Now you can do some more trading. Now you can use your opportunity, right? And so that is so important. Your risk management is not one number because your trades are not consistent. You're never going to be trading the exact same thing every single day because that would mean the market would have to give you the same thing every single day and it doesn't. You just have to come with your set of rules that you know are true and that's what you use, right? You just have to come with your set of rules and that's what you use. So when we look at our volume bars, we had such a strong push to the downside. And now it looks like we're reversing. So where I got out in profit, the 300 is obviously better. But where I got out in profit, I'm perfectly fine with that. Because guess what? I would have been negative on the day now. Even though I entered maybe somewhere here and the price is still down here. Not only the reversal is taking me out, the time decay, the gamma, and all of the other Greeks. But that's also the benefit of options, is that you can make 205 minutes. And if you can ask yourself these questions and ask yourself the question of how much am I willing to lose, and you stick to that, keep that top of mind, and you come with this toolkit that you know that works, and you know you're a scalper and you are in that, or you know you're a swinger, so you only do that, or you know you only like to trade one stock, you stick with that. Like, there's some things you just stick to. So this also might be a stepping stone to push farther down. As we see at the 617, that was actually somewhere where we wanted to be at, right? We had two different touches to this line, and I wouldn't be surprised if we touch it today or tomorrow. Tomorrow's Friday, so these two, I mean, if the circle was circle, y'all see where I'm at, here and here. We might just repeat that and come down here. This could be a really great swing to have like a 4-day hold, sell it in a day. So you don't, like, if you want to buy a swing, you always buy it way farther than you think. So you would buy like 2 weeks out, sell it tomorrow or the next day. I mean, that's not wrong. I would take that. I'm not going to, because I'm not a swinger, so I'm not doing it. But if you wanted to, you could do that. Like, I would put it on paper trade and just see what it would be, right? But that's all for this video. Definitely make sure to smash the like button on this video, and go ahead and let me know what you traded today. Let me know what you traded. I know yesterday people told me they were trading gold, which is great. So just let me know what you're trading today, and I'll see you guys in my next video. If you want to watch more of these type of videos where I'm breaking down the charts and candles